Hello, everyone, and welcome to Pioneer FX. I just wanted to touch up on volatility and the importance of volatility in this crazy market. Volatility is really, really important, guys. I cannot stress how important volatility is. Here we're looking at a VIX chart. If you just type in VIX, VIX within TradingView, it will come up. And we're currently looking at volatility at around 15.6, which is at our current low for day trading only. Reason being, the reason why I've stated day trading is because where does volatility go every time it's within its low band? Whenever it's within its low band, it always tends to go up. There's only one direction for volatility, which is up. Okay. And as it does head up, that means obviously there's a lot of volatility in the market. The pip range increases all of a sudden. It's going crazy high, crazy lows through session times. Asia, the UK, the US session. It tends to go like crazy. So you want to be banking profits, sort of intraday trading, day trading, whilst it's low. Okay. So I've selected it within a few bands. So I've got my low for day trading. I've got average for adding small swing positions as it's high. As volatility tends to push up, where does it tend to go after? It always tends to go back down towards the low. Okay. So day traders this year, having a look at this chart, how many times did volatility go up? Now, the best way to measure volatility going up is by looking at it from the 4-hour time frame, okay? And really and truly just zooming out. I like to use this indicator below. It's called the TDI indicator, which is a measure of strength within the market. And looking at this TDI indicator, we've got these two blue lines here. You see the two blue lines? These two blue lines, whenever the strength or the price tends to come out, this green line is basically the price or the strength in the market. Okay. So whenever price tends to come out of this volatility band, there's only one direction for it to come back down again. So you can start to position yourself as the volatility index has come out, as the price has come out of this volatility range. This is when we can start to gauge to enter our long-term swing trading position. You can either look at it from the 4-hour time frame, or you can do it as I've done it by looking for the base low for the year, and then obviously looking at the base high for this year. So looking at it from, let's have a look at it from the daily time frame. So on the daily time frame this year, from 2021, you could say the lows were in between 21 and 16. But then again, it was more or less averaging more towards the 15 mark as the low. Okay. So when volatility is low, obviously the market doesn't tend to move as much. But when it starts to go from low to going high, this is where obviously you start to get more pips out of your session times. And obviously the market is very volatile. It can go the other way of your fundamentals. So hence the reason why I've mentioned, obviously, in order for you to identify the best times to start holding swing trades, or if you want to be swing trading, or if you are a swing trader and you're looking to hold positions, the best time to be swing trading is during these times when it's extreme high. So you can see obviously the market went towards the average high swings. It came out of the volatility band on the 12th of May, and it pushed all the way down towards the low here on the 28th of May. Now looking at this from the 13th and 28th, we could say, yeah, last month we were looking for longs for Australia. Fundamentals were looking great. You can have a look at my previous webinar that we did undertake last week, the recording that I done last week for you guys. And obviously You can actually sign up to my Telegram group. It's a free Telegram group whereby I do sort of tend to every now and again, um, obviously update you guys with regards to the fundamentals and the CFTC reports, the COT reports as well, as to what the institutions are planning to do. Now, last month we were looking for Australia. They were pretty long. They're still currently still positioned to actually strengthen. The New Zealand as well. The dollar are more of a bearish stance due to obviously high inflation, and the pound very strong as well indeed. So looking at this last month from the 13th to the 28th, we had obviously volatility at its peak high position to come back down from the 13th and 28th. Let's have a look at it on the other chart. So the 19th until the 28th of May. So from the 19th, which is here, so from the 19th up until the 28th of May, you can clearly see it was on an uptrend. We retrace back down, but mainly towards the uptrend. So you do get the point here that I'm trying to make, and tends to come down. Best time to be looking for swing trades. And as you can see here, most recently, obviously we had that FOMC, volatility pushed all the way up. On the 21st, which was the start of this week, up until today, volatility was pushing down from the extreme high, as you can see it from the 4-hour time frame. And obviously AJ, we were long. So from the 21st, as you can see it here, it was at the extreme low. Best time to have been obviously positioning yourselves for a nice long trade setup, and currently around 178 pips in profit. So I hope you guys managed to gain something out of this volatility. Not many people actually speak about this, and funnily enough, it is the most important thing. I mean, the very first thing I look at before I even open a chart is the volatility, just to see where we are, where we're going. At the moment, we're in a day trading environment, intraday trades. It could potentially push down even further if we zoom out. Actually, let's zoom out towards the daily so that we can see a better picture. It could actually push down towards the 10 or 12 mark to close it off. However, it's still within the extreme lows. I mean, if it does break the 15 to position to come back down, we could still hold our long-term swing trades. But looking at it from the volatility band here, we're currently at extreme lows, guys. Well, heading towards that extreme low. So do keep an eye out of this using the TDI index. Great tool to use for obviously swing trading and to measure the VIXX, the volatility index within the market. Thanks very much, everyone. Take care. Bye for now.